All right, let's break down the key insights from this discussion about the economy, gold, and the broader financial system. The economy is in a tough spot right now, and the rising cost of groceries is something everyone's noticing. This isn't just because of the current administration, it's a result of years of misleading claims that the economy was strong when it wasn't. The numbers we've been fed, like GDP growth, have been propped up by government spending, not real economic growth from businesses or individuals. This means our economy is more fragile than it seems. Donald Trump's approach is to cut government spending and regulations to boost real business growth. This is important because a big chunk of our GDP, the total value of goods and services produced, comes from government spending, not private sector activity. If we cut spending without growing businesses, GDP could shrink, which would mess with interest rates and other economic indicators. For the economy to grow sustainably, we need real wealth creation. Businesses making money, not just the government spending taxpayer dollars. Now let's talk about gold. There's something big happening in the gold market. Someone in the US, possibly the Treasury or the Federal Reserve, is buying massive amounts of physical gold, causing shortages in places like London. This is unusual and has caught people's attention. Gold is flowing into the US at record levels, and it's not clear why. The theory is that this could be preparation for a gold audit or a major financial shift. The US government currently values its gold reserves at $45 an ounce on its balance sheet, even though the market price is around $2,900 an ounce. If the government revalues its gold to match the market price, or even higher, like $5,000 an ounce, it would make the national balance sheet look healthier. This is because our debt to GDP ratio, how much we owe compared to what we produce, is dangerously high. By revaluing gold and other assets like oil and minerals, the government could make our financial situation look better on paper, which might make it easier to borrow money in the future. Why does this matter? The US is struggling to finance its debt. With our current spending habits and credit rating, lenders might not want to give us loans at low interest rates. If we can show we have valuable assets like gold and natural resources, it might convince lenders we're not as risky. But there's a catch. If this plan fails, we could lose those assets, weakening the country further. This ties into broader concerns about the dollar and the financial system. Some believe the dollar is being intentionally weakened, possibly as part of a shift to a new system. The Biden administration's policies may have accelerated this, but without a clear plan to replace the dollar, Trump's approach seems more focused on strengthening America, possibly by moving toward a gold-backed financial system. This could mean tying the dollar's value to gold to restore trust, but it's unclear how this would work. There's also a concept called rehypothecation at play, which is super important. It means assets like gold or even your house are being counted multiple times on different balance sheets. For example, the US might claim its gold as an asset, but it's also leased to other countries who count it as theirs. This creates a Ponzi scheme where everyone thinks they own the same asset. If everyone tries to claim it at once, the system collapses because there's not enough to go around. This is similar to what happened in the financial crisis with credit default swaps, where loans were packaged and sold multiple times, leading to chaos when people couldn't pay. So what does this mean for the average person? The economy's fragility could lead to higher inflation, especially with Trump's tariffs on imports from places like Canada, Mexico, and China. Tariffs raise prices on goods, which hurts consumers unless wages rise to match. Trump's betting that by keeping profits and jobs in the US, wages will go up. But it's a risky move. If it doesn't work, everyday people will feel the squeeze from higher prices. The gold rush suggests something big is coming, maybe a new financial system where gold plays a central role. If the government revalues gold to $4,500 an ounce, your dollar's value could drop, but gold's value would skyrocket. This is why some people are buying gold as a hedge against a collapsing dollar. Here's what you can do to protect yourself. Make sure you own your assets outright. If you own your house or car, keep the title safe and make sure it's not being resold in risky financial packages. If you're buying a house, try to get a loan from a local bank that won't resell it. Avoid loans tied to complex financial instruments like credit default swaps. Consider investing in real assets like gold. If the government revalues gold, its price could soar, protecting your wealth as the dollar weakens. Stay informed about the economy. The situation is dire, and big changes are likely. Understanding what's happening can help you make smart decisions. The bottom line is that the financial system is at a breaking point. The gold buying, tariff plans, and rehypothecation risks all point to a potential reset. Trump's team is trying to fix the economy, but it's a high stakes gamble. For now, focus on securing your assets and staying aware of where the economy is headed. One last big piece here. This is the very foundation of moving to the new digital asset-backed system to hold all accountable and no longer able to steal from those that carry the weight of the economy in the old Ponzi scheme banking system. In short, gold-backed stablecoins are cryptocurrencies pegged to gold's value, reducing volatility compared to traditional crypto. Each token they operate similarly to fiat-backed stablecoins. One token typically equals 1 troy ounce of gold. Holders can redeem tokens for physical gold or its cash equivalent, depending on the issuer's terms. In the end, the advantages include lower storage and transport costs compared to physical gold. They're divisible for micropayments, compatible with DeFi platforms, and serve as a hedge against currency devaluation. So there you have it.